Hey everybody, welcome back. Sive here with the Forex Peace Army. Let's, as usual, take a look in the gold market. So in general, here is everything goes for the, with the scenario and view that we discussed recently. It's not a secret and not the problem to understand what actually is going on, why gold is dropping right now. There's massive demand for safe haven assets, and that's literally actually has relation to mostly to the cash, so the money markets, instruments, so bills, deposits, cash, and particular United States dollars, Swiss francs, and so on. Necessity to fulfill the margin obligations on the stock market that also is falling. Let's make the pressure on the gold. This is the process that we warn about, and actually we talked about every time when we discussed long-term view. As we said, in the initial stage, in the first moment of the collapse, gold will drop because everybody will start selling everything, including the cryptos, commodities, everything, just to hold in the portfolios more valuable assets such as the stocks, maybe some others. And just to, in the case of the drop, they need to keep the initial margin at some predefined level. They will need the cash to bring it on and add it to deposit just because of the dropping of the market. That's particularly what we currently see. Speaking on the technical side, market yesterday also was able to complete the 45.50 target that we have on the lower time frame. Despite that this was the primary one, just on the momentum, market dropped significantly lower and completed the 45.50 as well. So currently market is not quite sensitive to any decisions from the European central banks and so on. So you can see that it's mostly no reaction, because the major driving factor for gold now is demand for the cash. Recently news have been released that Middle East countries, Emirates, Saudi Arabia, Bahrain and others start selling their gold reserves just to fulfill drop in the budgets, and because of the drop of the crude oil extraction. So, and it process maybe not as strong as it might be, and maybe it's not the major dominant factor, but still it makes some pressure on the gold, and it is not end yet. So it's not over yet. This market will remains under pressure for some time, also due to the additional supply and the selling from the Middle East countries as well. From that standpoint of view, it's raising a big question: what will happen with our big pattern that we have on the weekly chart? On the weekly chart, the picture stands really amazing. So you can see what has happened. Big grubber, suggests taking out of the top, and collapse. It's huge oversold area on the weekly, so it's breaking everything, and raises the big question whether it might be some kind of the wild card opportunity when the market so strongly oversold and provides so small potential risk of this trade. So for instance, take a look at the difference between the actually lows here and the invalidation point of the grubber. For the weekly chart, it's approximately $100, so it's not really big distance for this time frame, although maybe for daily time frames in intraday charts this is big distance. But here you can see risk very small, and could market start upward action right from here and reverse up. This is very it's a really big temptation here, trying to take the position here with this really big oversold, suggesting that this might be reversal. And actually theoretically it might happen, but if you would take a look at the fundamental background geopolitical situation, it seems that this process is not over yet. So it's somewhere in the beginning, because the major impact of this war is not yet starting to materialize. So everybody just talk about it, suggest, calculated, but there are no real impact on the business yet. So it will last for at least a few weeks more before we'll get this, and after that another wave of possible sell-off might happen, because countries will need cash constantly, and they will not get it from the major business, which is selling of the hydrocarbons. So that might be a long-lasting effect, and the gold, it might be a more or less significant retracement. So we can't exclude that this might be the factor that will trigger finally the big retracement on the monthly chart, where actually it's already should started for a long time ago, but by some reasons it hasn't started, and that might be the real factor that could trigger it. So currently this grabber stands on the big question, because this performance definitely not in a row with the bullish market. Market has broken all the support areas, has straightforward acceleration, and currently in this point I do not see yet any good bullish factors for thinking about position taking. So we have to be extra careful currently and do not take the position without any clear patterns. That's the best case to act and best scenario. On the 4-time frame chart, what we could get today. So since today Friday, I think that makes sense to focus on the patterns that we could trade for now. And the first pattern, actually, and the only pattern that I see here, is potential bread and butter sell trade. So you can see we've got good frosting downside action recently in the first pullback up, with a possible bearish grabber on top. Also take a look here, we have equal tops, some kind of the tweezer tops here, which indicates some stepping of the sellers on the gold. This pattern might be as it could trigger as downward continuation, or it could just be for minimum target that we have for the bread and butter. I prefer to focus on the minimum target just because of the end of the week and just because of the oversold on the daily chart. So it's better to not expect that you will get this straightforward downward continuation. Better to focus first on the nearest support area. That will be the destination point. It's approximately around 46.15, 46.10 maybe. So you could calculate the 618 support on the whole upward direction by yourself. On the hourly chart, you could see that market also stands at the conference resistance 47.27, 47.09. Conference area, strong resistance where potentially downward momentum action could start, because previous drop, you can see, very strong. Momentum still stands in place, and it will push price lower just to reach at least the area that we have predefined. So maybe even lower. So based on this swing, 600 support will be approximately around 45.90. So right, not even 46.10, but it seems that 45.90 might be the target of this possible pullback. That's the trade that I see for today. For next week, we will see, because we need to understand what will happen in this bottom. If we will get some clear bullish reversal pattern, that's one story. If we will see some consolidation, we definitely will give a hint on the possible downward continuation. It's quite another story, because as you understand, consolidation pattern, continuation pattern here, suggesting that we will get the drop below these lows, it immediately tells you that we will get downside retracement of the bigger scale. So we start to consider this A, B, C, D, OP target first, then the possible XOP, and so on. So that will be absolutely different scale, and the context on the gold could turn to the bearish for a few weeks, if not even a month. So that is why this level where market stands right now is quite important, and we just need to see what will happen there. But for today, it's just this possible momentum trade.